For more now on the state of the U.S. economy, we're joined by Ken Kuttner. Ken is a professor of economics at Williams College. Good to see you again, Ken.
Good to be with you, Sean.
Okay, GDP slowing a bit more than projected, but still coming at a healthy clip, 2.3%, less than in the third quarter of last year. But overall, analysts, from what I've read, are saying it allows newly sworn-in President Donald Trump to inherit a pretty healthy U.S. economic landscape. Let's get your take on the numbers and where the economy is right now.
Yeah, you're absolutely right. 2.3% is less than the past couple of quarters, but it's worth keeping in mind that that's very close to the economy's trend growth rate. So moving forward, we shouldn't expect to see numbers really too far away from 2.3% over the next couple of years. And I should add that 2.3 is above the median FOMC members' estimate of the long-run growth rate.
Okay, so overall health of the economic state of the U.S. What are your thoughts on it? Consumer confidence is clearly dragging, but how do you read into these numbers right now?
Well, honestly, Sean, that's been a bit of a puzzle to me. We've seen very strong consumption numbers, while at the same time we've seen historically low levels of consumer confidence. Historically, those two variables have gone in the same direction, positively correlated. So this is really an anomalous period where consumers seem to be in a sour mood, but they just keep on shopping. Go figure.
Yeah, so this personal consumption information coming out Friday is going to be very important, I would presume, as well. What about high interest rates? Are they a drag at all?
Well, so far we haven't seen much of an impact of high interest rates, and you see that in construction spending. Housing investment is also strong in the GDP numbers released today, up 5.3%.
Okay, let's talk about the Trump administration. It has introduced some new economic policies, including proposed tariffs that could kick in just a couple of days, other fiscal measures. How might these policies specifically impact GDP growth in upcoming quarters?
Well, in the long run, obviously the hope is that tax cuts and deregulation will spur economic growth over a period measured in years. It's hard to find evidence of those kinds of supply side effects historically, for example, after the Reagan administration's tax cuts back in the 1980s. So personally, I doubt we're going to see much of an impact in the long run. Probably something more on GDP in the coming quarters, but here there's just so much uncertainty, it's anybody's guess. In fact, I'd say the only thing that's certain at this point is more uncertainty.
Exactly. I was waiting for that. So now, if indeed Trump unilaterally imposes these tariffs, especially on Canada and Mexico in a couple of days, 25%, what could that do overall? Because we're such a global economy right now. Is it as cut and dried? Yes, we'll punish them and we'll benefit in the long run.
Well, at this stage, Sean, I think it's a bit of a game of chicken. But if the tariffs do, in fact, go ahead, that's going to be a huge hit for the economy. We just import so much from Canada and Mexico, not only in terms of consumer goods, but in terms of intermediate goods for things that we produce. So that's going to drive up costs for firms. It's going to drive up prices for consumers. That's going to put a damper on their income. And that's going to create higher inflation for a time. And that's going to make the Fed less likely to continue cutting rates.
Interesting. Now, getting back to GDP, a lot has been made about the role of immigrants, how they play in the U.S. Economic situation, construction, farming, and there's an argument that Trump's unilateral plans, once again, could drag the economy down. Are you worried about that?
Oh, absolutely. It's hard to know what kind of numbers we're looking at ultimately. And the administration has talked about some really, really big numbers. I mean, up to like 10 or 15 million. Which would really create a huge hit to the economy. We're talking about something if those high numbers materialize, something like 1 to 2% of GDP. So that would be a big deal. And then, of course, restricting the flow of new workers in the economy. The economic growth in this country has been powered by a flow of immigrants in recent years, and so that's going to depress the growth rate going forward.